Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in corporate filings. And boy do we have a juicy tale today about a company getting ready to be scooped up. Pharmaceuticals is being bought out by Mankind Corporation, and this report lays out all the nitty-gritty details of that deal. It's like reading the script for a corporate merger, and we're about to break down exactly what this means for everyone involved. If you want more straight-up insights into complex business deals, smash that like button and join our Discord community linked below. Alright, let's dive in. What we're looking at here is a Form 8K filing, which basically means something big and important happened that the company has to tell the public about right away. Think of it as a public announcement of a major event. The headline here is the Agreement and Plan of Merger. This is the master document, the blueprint for the entire takeover. scPharmaceuticals, the company we're focusing on, is entering into this agreement. Pharmaceuticals is getting acquired. Mankind Corporation and a shell company they created, Seacoast Merger Sub, are teaming up to buy scPharmaceuticals. Mankind plans to start a tender offer. You can think of this as a public invitation for shareholders to sell their stock. They're offering a specific price for each share, which is pretty interesting. The offer price is a combination of sweet and a little bit of maybe later. It's $5.35 in cash for every share, plus something called a contingent value right, or CVR. This CVR is a promise for future payments, up to an additional $1 per share, depending on whether certain milestones are hit. It's like a bonus if things go really well. It's a cash and potential bonus deal. The goal is for Mankind to buy enough shares through this offer to gain control, and then they'll follow up with a full merger where scPharmaceuticals becomes a wholly owned part of Mankind. Now, to make this deal happen, there are a bunch of conditions, like getting enough shareholders to agree to sell their shares, usually more than half. They also need to make sure everything the company said in the agreement is true, and that the company hasn't experienced any major negative events since signing the deal. Plus, they need to clear regulatory hurdles. The deal is expected to close relatively quickly, or at least the tender offer will start within 10 business days of the merger agreement. The offer itself will be open for about 20 business days, but it could be extended. When the actual merger happens, every share of scPharmaceuticals will be converted into that offer price, the cash plus the potential CVR payout. There are exceptions for shares held by the acquiring companies or for shareholders who have specific rights to demand appraisal, which is a way for them to have a court determine the fair value of their shares. What happens to employee stock options? Well, vested options that are in the money, meaning the stock price is higher than the option's exercise price, will be cashed out. They'll get cash equal to the difference between the cash offer and the exercise price plus a CVR for each share tied to the option. If an option is out of the money, meaning the exercise price is too high, it just gets cancelled without any payout. Restricted stock units, or RSUs, which are another form of stock-based compensation, will also be treated nicely. They'll vest immediately before the merger, and then the holders will get cash equal to the share amount times the cash offer price plus a CVR for each share. Warrants, which are like options but sometimes come with different terms, will be handled according to their specific agreements. The company is also winding down its Employee Stock Purchase Plan, or ESPP, making sure any money contributed during the current period is refunded to participants. Both Mankind and scPharmaceuticals have made promises like trying their best to make the deal happen and cooperating on regulatory approvals. Mankind is also committed to securing the necessary financing for the deal. scPharmaceuticals has agreed to run its business as usual as much as possible and to maintain key relationships. They've also agreed not to solicit or entertain any other offers to buy the company. This is a common no-shop clause to prevent them from being wooed by a rival bidder. There are some conditions where they might be able to consider a better offer, but it's a pretty high bar. And to top it all off, the board of directors of scPharmaceuticals unanimously recommends that shareholders accept the offer and sell their shares. Now, for a little extra assurance for the buyer, key shareholders, including the CEO John H. Tucker and OrbiMed Advisors, have signed tender and support agreements. This means they've promised to tender their shares in the offer and vote in favor of the deal. Together, these principal stockholders represent about 11.5% of the outstanding shares. These agreements will end once the deal either closes or falls apart. Let's circle back to those CVRs. This section outlines the Contingent Value Rights Agreement, which is the official document detailing how those future payments will work. These CVRs give holders the right to receive cash payments if certain milestones are met. For milestone 1, it's about FDA approval of a specific drug-device combination product called an injection product. There are different payout amounts depending on when this approval happens. If it's approved by September 30, 2026, it gets $0.75 to a CVR. If it's later, by December 31, 2026, it's $0.75 2026. It's $0.55 T 2026, it's $0.55 T10, and by June 30, 2026, it's $0.50. A milestone 2 is tied to sales. If the company achieves at least $110 million in worldwide net sales of specific products in any trailing 12-month period, ending by December 31, 2026, then holders get another payment. Specifically, Force in 2026, then holders get another payment, specifically AR if sales hit $12.5, $10 million, $10 million, and $120 million. Others, or a prorated amount between 0, 1, 10 and Rue $20 million, or prorated amount between $0 and $10 million when a 1 T5 fence. If sales are between $100 and $1 is said to $110 $20 million. Or a prorated amount between $0.1 T5 and sales are between $100 and $10 million and error around 25 cent. Subjectively error if sales hit $110 million, $10 million. Mankind is obligated to use commercially reasonable efforts to achieve these milestones, and this is a big but, there's no guarantee these milestones will be hit or that any of these CVR payments will actually be made. This next part is about disclosing information to the public under a regulation called Regulation FD, which is all about fair disclosure. The company and Mankind issued a joint press release on August 25th announcing the merger agreement. Essentially, they're putting out the good news. This part is important for how we should view the information being shared. It clarifies that this isn't official SEC filing information in the way a full registration statement is, but it's being furnished to keep everyone informed. Here they're giving investors a heads up about what to expect next. When the tender offer officially starts, more detailed documents will be filed with the SEC, and investors are strongly urged to read them carefully because they'll contain all the critical details about the offer. This is a standard legal disclaimer in most filings. It basically says that some of the statements made are predictions about the future and that actual results could be different due to various risks and uncertainties. They list a whole bunch of things that could go wrong, like the deal not closing on time, not getting enough shareholder buy-in, competitors making offers, regulatory approvals not coming through, financial issues if the deal is terminated, and importantly, the risk that the milestones for the CVRs might not be achieved. They also mention that diverting management's attention to this deal could also impact the company's day-to-day operations. The filing also touches on scPharmaceuticals' reliance on its product FROS-IX and its other potential products. The challenges of getting regulatory approvals, manufacturing and supply issues, the company's history of significant uncertainty of ever achieving profitability, and finally this section lists the exhibits that are part of this filing. The most important one here is Exhibit 2.1, which is the actual agreement and plan of merger between Mankind, the Merger sub, and scPharmaceuticals. We also have Exhibit 99.1, which is that press release we mentioned earlier. And the report is signed off by John H. Tucker, the President and Chief Executive Officer of scPharmaceuticals. So let's talk about what this all means. On the surface, this is a pretty standard acquisition. Mankind is buying scPharmaceuticals for a mix of cash and a potential future payout tied to performance. The 5.35 cash component gives shareholders a definite immediate reward. However, the value of those CVRs is a big question mark. The milestones are tied to regulatory approval and sales, and the company itself admits there's no guarantee they'll be hit. Looking at scPharmaceuticals' business, they have history of operating losses. This deal likely offers a lifeline and a chance for their technology to be developed further under Mankind's wing. The key risk here is that those CVR payments, which could bring the total deal value up to $6.35 per share, might never materialize if the milestones aren't clear. Investors who were hoping for a big payday from scPharmaceuticals might need to temper their expectations unless those milestones are cleared. For Mankind, this is a strategic move to expand their portfolio, likely with scPharmaceuticals' key product, FORASEX, being a major draw. The success of this acquisition really hinges on how smoothly the integration goes and critically whether the CVR milestones are achieved, which would signal a successful commercialization of scPharmaceuticals' assets. Overall, it's a deal that provides immediate value to scPharmaceuticals shareholders while betting on future success for mankind. The real story will unfold as we see if those CVRs pay off. Alright, that's our breakdown of the scPharmaceuticals merger filing. What's your take on this deal? Do you think those CVRs are worth holding on to, or is the cash the real prize? Drop your thoughts in the comments below. If you found this breakdown helpful and want more dives into corporate maneuvers, be sure to hit that like button and subscribe. And don't forget to join our Discord community for even more discussions and insights. Thanks for watching, and we'll see you in the next video.